So we saw that Tesla stock had another brutal day of selling off, and in fact we closed much more lower in today's trading session than the day prior. Now in yesterday's video I talked about why I believe that Tesla was going to continue selling off, and I explained a couple reasons why. But in this video I want to go ahead and break down what we're currently now seeing. For example, we saw that the 10-year treasury note continued to rally up higher, and this is concerning because a higher yield on the treasury could drive away capital from equities. And the reason being is because equities, right, tend to be much more riskier than risk-off investments like investing in treasuries. And so if treasuries start climbing up higher, well, that could drain liquidity from the market, causing some more selling pressure for the overall markets, including Tesla stock. But along with that news, today we had the FOMC meeting minutes released, and if you parse through the data, we see that on page 9 it says most participants continue to see significant upside risk to inflation, which could require further tightening of monetary policy. Now this of course has an underlying hawkish tone in which Tesla stock as well as the overall markets did not like this when this news came out. Now I told the Push and Profit private group today that the next opportunity to possibly hear some dovish tones from the Federal Reserve or the FOMC would be pretty much around next week. See, we don't have an exact date, but if you go to kansascityfed.org, we see that the Jackson Hole, Wyoming meeting, or the annual meeting, is most likely going to be held on August 24th through the 26th, where we're going to hear Fed Chairman Jerome Powell speak, and we're possibly going to get an update on monetary policy and see if it has, pretty much changed from the meeting minutes that we had in July. Now, in regards to inflation, what we're currently seeing is that inflation is cooling off. In fact, if you look at the leading indicators like commodities, with the exception of obviously crude oil, etc., we're seeing that commodities are softening, and we see that there is some cooling off in inflation, yet the Fed still believes that they have to be a little bit more aggressive, right? Now, this could simply be because if we take a look at what happened in Canada, we see that, they paused their rates, yet we saw that inflation tick back upwards. So this is possibly causing a little bit of a scare to the Federal Reserve, but as well, there's also the reminder of what happened in the 1970s. And so this is why the Federal Reserve may continue, with this very tight monetary policy, and that could obviously have a ripple effect to the economy, in which many bears kind of see that the Fed may kind of, and I'm trying to look for the words here, but be a little bit too aggressive. But we also saw in the FOMC meeting minutes that the Federal Reserve said that they stressed that inflation remained unacceptably high. Now we also have to understand that the Federal Reserve isn't going to be coming out too dovishly with the words that they choose to say, simply because at the end of the day they also have to worry about inflation expectations. And so that's definitely a concern with the Federal Reserve, and that's why we see that they're choosing their words very carefully, and again still holding that aggressive tone. However, we do want to see that update that's possibly happening next week at the Wyoming Jackson Hole annual meeting. But it wasn't all bad news today, because we actually saw that Tesla did get a big win with Texas with charging mandates, with basically the idea that Tesla may get some federal funded dollars into their charging station. So we're going to go ahead and talk about that further on in the video, but I do want to highlight some other additional topics before we head into my laptop. For example, tomorrow's economic data is going to be the initial jobless claims, as well as the US leading economic indicator, which is coming out at 10 a.m. And so those two data points that are coming out tomorrow are pretty decent data points that we absolutely want to go ahead and pay attention to. Now, I do also want to provide a friendly reminder before we hop into my laptop that if you have not already, check out the links in the description below, because one of the links is actually a link to my free weekly newsletter, where every single Sunday I pretty much send out a newsletter of what's going on with the overall markets. And again, it is completely free, so definitely check out that link in the description below. And with that said, let's go ahead and hop into my laptop and cover Tesla with some other information in more details. Alrighty, so we are officially in my laptop taking a look at Tesla from a daily time frame at this very moment. Now, for those of you guys that have been subscribed to the channel for a while, then you guys would know that I've been quite bearish on Tesla in the short term for a bit now, right? In fact, it's actually started once we had the earnings on the 19th. And while many celebrated on YouTube, a lot of the Tesla channels that you see celebrated that Tesla beat its earnings and it's going to go to the moon, I said something differently, right? And I said that, hey, this is actually not a good earnings report, and the forward guidance wasn't great as well, right? And so one of the things I try to preach is that, there's a lot of nuance in regards to earnings. You can't just look at a company beating its earnings and think, well, okay, it beat its earnings, it's going to go to the moon. No, right? It's important to differentiate between beating estimates and growing earnings, right? While companies and certain media outlets may celebrate, surpassing estimates, it doesn't necessarily imply improvement in the top and bottom line. Now, for Tesla, in this example, right, we're talking about what I'm saying about the nuance with earnings applies to every stock, but staying hyper focused on Tesla, yeah, we saw that, Tesla did grow, so that's a different story, right? But what did we see with Tesla, right? Well, we saw the profit margins compress. And so one of the things I've said is, hey, I'm bearish on Tesla, and the areas that I want to look at is that range, the low 200s. I've been saying this for a while now, and I remember when I first started talking about it, individuals, commented that I was crazy, that Tesla was not going to go this low. And look at where we're at now. If you guys just go back and watch these videos, it's not like you could edit previous videos. If you simply go back, I've been saying it day after day, pretty much that we're going to continue seeing this selling. And one of the things I've highlighted is this range of the 230 to 215. I said in yesterday's video, that's the area I'm looking at Tesla. Well, why is that? Well, we see that in the past, that's been somewhat of a support, right? And so that's why this 215 range is what I'm currently looking at. Now, we're not too far away from that, right? And now, one of the things I want to also point out is that if we stay just looking at a technical perspective, right, looking at the volume profile, volume relative to price, we see that there's a very low amount of volume relative to price. We have this volume gap over here. Now, don't get confused. Volume relative to price is different from volume relative to time. It's completely different, right? And so what we see here is that there's less of an exchange between buying and selling around these historic price levels, right? And so what that means is that if there's selling pressure, well, that means it's going to push down the order books fairly quickly. Just inversely, if there's buying pressure and there's very little volume relative to price, well, we're going to see the order books push up, right? And so we saw that when Tesla was moving up, when there was very little volume relative to price, we saw these big green candlesticks. In fact, we had this gap right over here, just major days pushing up, right? And now we're on the way down. And so what we're seeing is that it's falling down very sharply. I mean, if we just look at this candlestick right here, look how we have this long wick. Some people call it a tail. Some people call it a shadow. Some people call it a wick, whatever you want to call it, right? Soda, pop, potato, whatever you want to call it, right? We see that's very long. So we see that this indicates that there's definitely rejection over here, and the body of the candle closed right over here. Now, I hate to only focus on technical analysis. I think technical analysis is a great data point, but on its own, it's in silo, it's not the best, which is why I like to combine and use technical analysis and confluence with data points and looking at fundamentals and, of course, alternative data. And so right now, we're starting to see something that I've said for weeks now, right? About, hey, when we enter into this area, we're going to start seeing that steep decline. Combining that with, the 10-year treasury rising, combining that with the hawkish sentiment from the Federal Reserve, well, that's not good. I mean, let's go ahead. I showed it earlier, but let's go ahead and look at a 5-minute time frame, right? And 2 p.m. is around right over here, 14:05 if we're talking military time, right? The minute that report came out, we saw a steep sell-off, right? The markets did not like that. Now, of course, it did rebound, but eventually it just continued selling off. And so this hawkish rhetoric from the Federal Reserve is obviously not being taken very well from the market. Now, again, I did say that the next opportunity to see if we have any dovish comments is going to be in the Jackson Hole, Wyoming press conference. But at the end of the day, it's not just about the Federal Reserve hiking or pausing in their next rate decision in September. The real question is, well, when are they going to start cutting? Now, we know that the Federal Reserve can cut very rapidly. I mean, if we flash back to, a Sunday during the pandemic, I don't remember exactly which month it was, but we saw the Federal Reserve cut interest rates by 2%, right? Which is very large. I mean, we've been hiking by, 25, then 50, then 75, then 25. And so 2% would pretty much be the last 8 meetings. And so they have the power to cut rapidly, and that's great. But the problem or the concern is, will they keep monetary policy too tight? And will that once they start cutting, will it be too late? Because it's not like they cut rates or they hike rates and immediately the overall market reflects that overall. No, it doesn't happen overnight. It takes time and it's approximately about 6 to 12 months for the economy to feel what has been done in monetary policy, right? And so that's the main question. It's not even about whether they're going to hike or pause in September. Of course, that is, something we want to pay attention to. But the real question is, well, when are they going to start cutting and how aggressive are they going to start cutting? And it seems like they're kind of holding off on doing that. And so that's not too great. If we take a look at, let's go ahead and look at QQQ, which is the NASDAQ index ETF. And we see it's almost showing this technical pattern of being a double top. Now, I hate looking just at patterns as patterns tend to repeat themselves, but it's not something that's guaranteed that, hey, just because it looks like a double top, it is a double top, right? Because, of course, there could be data. I like to say that we have to be data dependent, and there could be data that obviously could shift everything, right? But as of now, we've seen that the tech sector is pretty much selling off now. Now, of course, in previous videos, I talked about other issues going on with the economy, which credit rating agencies doing further downgrades, which of course is not good for the overall market as well. And so, there's a lot happening. And so right now, there's not much bullish optimism. Now, I do want to touch back on the good news that we did get today, right? So what happened today? Well, as I mentioned earlier, we had the good news with Texas being able to approve a plan to require, electric vehicle charging stations to be eligible for federal funds. And what is a charging station that is pretty much being the dominant charging station in America? Well, it's the Tesla supercharging network, right? And so Tesla is going to benefit tremendously off this. However, one of the things we have to understand is that if you looked at the recent earnings report for Tesla that came out on the 19th, we saw that charging stations are included in other services, and it only makes up a small, minuscule amount of Tesla's overall earnings. So it's not necessarily, something that's huge. So that's why, although we got that good news, we didn't see Tesla skyrocket, right? And so I try to preach this, because you'll see a lot of the other Tesla channels, they'll pick apart any good news for Tesla and say, well, Tesla deserves to be in the sky because of this. Well, not really, right? Because Tesla's gonna get federal dollars, right, from Texas, the state of Texas, but does that really make a huge impact? No. I mean, in the long term, I think that's definitely beneficial for Tesla, and I think we're going to see more states follow up. If it's to my good memory, I believe that Florida, right, and Wyoming discussed the topic of doing that, and I think Kentucky has already mandated that. So that's really good news, right? Because we want to see more states pretty much fund these supercharging networks, which means that Tesla's going to have a greater network for all these other, legacy or, electric vehicles, whether they're legacy companies like Ford and GM or whatever companies, as long as they're EVs, adopting the Tesla supercharging network. Well, that's good, right? And maybe in the future we can see, the earnings from the supercharging network, exponentially grow. But as of now, it's not something that's too big. Just like the humanoid Tesla bots, right? It's definitely something that can contribute significantly to Tesla in the long term, because obviously one of the main concerns is population decline, and obviously we want to see productivity continue increasing. And if we don't have people working in the labor force, well, that could be a huge issue for the GDP. But if we have, Tesla solve this problem with its bots, well, that could be tremendous, and that's why that could have a huge advantage to Tesla. But unlike the other channels who praise, Tesla for having, the idea of these robots, the reason why it's not a factor in Tesla stock right now, right? We don't see Tesla stock reaching all-time highs because of, the humanoid Tesla bots, right? I think they have, I believe it's a different name, Optimus, right? Is because we heard in the last earnings call that, Elon Musk himself said they made about like 4 of them, so just a few. And he also mentioned that it's difficult to make them, right? To get the resources to make them. So, although it's good, it's not something that we could see reflected on Tesla stock just yet. Now, if Tesla and Elon Musk can pull off, manufacturing, producing, selling, and distributing these Optimus humanoid Tesla bots, and they can serve a great purpose to, increasing productivity, well, that's going to be massive, right? That's why, I am bullish on Tesla in the long term when you look at, other things in the fundamentals. But things like that, like the Tesla robot, it's not something you could put a price on yet. And so that's why, you see a lot of these people online kind of praising, Tesla, that's going to, should be, I've literally saw a video of someone saying that Tesla should be to the moon right now, but they're not because of, They said something along the lines like the Cybertruck production starting alone should have brought Tesla to all-time highs, and it's honestly a facepalm moment because no, that's not the case, right? We'll see once we have the catalyst event of first of all seeing how profitable and how much of sales the Cybertruck is going to yield, which I'm actually very optimistic for that. But we don't see that yet, and so we're gonna have to hold off. But one of the things I am saying, right? Let's go ahead and look at things from a long-term perspective from an investor, right? I've talked a lot about trading and looking at Tesla in the short term, but what about the long term, right? So I believe that we're gonna fill this volume gap. We want to pay attention to that low 200 to 215 because why? Well, again, I stated that that's an area of resistance. It's an area that's been of support as well, and so we want to see how Tesla does around that level. If it fares well at that level and starts bouncing up, well, that could be potentially a good opportunity to add into your long-term portfolio. You want to, buy things when they're on sale and showing confirmation of an uptrend. You don't want to just buy things as they're falling down because you could buy something that's a falling knife. I mean, imagine just buying the dip in 2022 and Tesla just keeps falling down, right? Wouldn't it have been better to wait for the reversal to confirm, right? We see the selling pressure, the rejection, then the consolidation, and then the confirmation, right? Wouldn't it have been better to buy in here as you dollar cost average, right? Now, I do have a separate video basically titled The 3 Stages of a Reversal, and it's applicable for anyone who's trading and also investing in the long term, and I highly suggest you guys check out that video or the playlist of just helpful trading and investing tips. I do have a playlist like that, but what I'm saying is we may have some good opportunities coming for Tesla, and yeah, things are looking pessimistic and bearish now, but I think we're finally getting closer to an area where we could yield some opportunities actually seeing Tesla go upwards. We just have to be patient, right? We can't expect, something that gets me, I don't want to say it, but something that's a bit kind of annoying is when you see people that expect, a stock to forever go up. That's not going to be the case. I mean, if that's the case, and it was just easy like that, everyone would be rich. And that's not the thing. You have to be patient, especially if you're a long-term investor. You have to be into something for the long term. And again, I know I talked a little bit bad about the Optimus robots, but fundamentally, I'm optimistic of Tesla with their vehicle sales in the EV space going into the long term. It's just right now, things are not looking that great, but that moment is coming soon. But with that said, I don't want to make this video too much longer. I do want to keep this video short, sweet, and concise. Let me know what your thoughts are in the comment section below, and make sure to watch this next video right here. It's actually the 3 stages of a reversal that I have right here. So check out that video, and I'll see you guys on that next video. Take care.